Life insurance versus over October 15th, 2025 versus decreasing term versus family income benefit. Which one is better for seniors planning security? Planning for financial security later in life is crucial, yet many seniors get this wrong. Most assume standard life insurance is enough, but the truth is that different policies serve very different needs. Choosing the right one ensures that your loved ones are protected and your legacy is secure. Over October 15th, 2025 life insurance is designed for seniors who may not qualify for standard policies due to age or health. It's easy to get, often requires no medical exam, and guarantees a payout. However, premiums can be higher, and the payout might be smaller compared to other plans. This is ideal for those looking for simple, guaranteed protection. Decreasing term insurance is typically used to cover outstanding debts, like mortgages. The payout decreases over time, matching the reducing debt balance. For seniors with a home loan or other liabilities, it ensures that debts are cleared, leaving family members financially secure without paying for more insurance than needed. Family income benefit insurance is less well known, but very practical. Instead of a lump sum, it pays a regular monthly income to dependents if you pass away during the policy term. This can replace lost earnings and cover living costs, providing long-term financial stability for your family. So, which is better for seniors planning security? If you want guaranteed, simple coverage over October 15th, 2025 life insurance is the easiest option. If your goal is to clear debts, decreasing term is ideal. And for ongoing support to family members, family income benefit offers peace of mind that monthly expenses are covered. Ultimately, life insurance at any age is about protecting those you love. Choosing the right policy ensures that your later years are not just about planning for yourself, but securing the financial well-being of your family long into the future.